Well, ladies and gentlemen, welcome back to another XM.com episode. We're looking at signals that drive the market, trading opportunities with Peter McGuire. Pete, Labor Day, not much out of the US yesterday, but we saw a massive downturn on the numbers at non-farm payrolls as we predicted last week. Just walk us through the weekend and let's talk about Monday signals that are driving Tuesday's activity.
Well, good morning, Will. Yeah, that non-farm payroll, the analysts were saying anything up to 900,000 positions for the month. And they actually, and 760 was about, line ball, where they, most of them migrated to that sort of number as a forecast. It came in at 240, 250,000. So you can see 500,000 shy on the forecast. That really put a bit of a wake-up call, 7-month low as far as job openings or job positions taken over a month. What impact that is, we mentioned last week also that Michigan Sentiment Consumer Index.
Off 13%, mate.
Yep, absolutely. One of its biggest falls, monthly falls. I think it's matching about 6 months of numbers since 1978. So that's a bit of a wake up as well. Inflation, gold had a nice run up. US equities, as you mentioned, shut yesterday because of Labor Day. US dollar come back a little bit, paired a bit of those gains that we saw over the last couple of weeks. But we've got a little bit to discuss this morning, short, sharp and sweet. 3 central banks meeting, Will, this week. European Central Bank, Bank of Canada and the RBA in Australia today.
All right, well, let's get into that. But before we do, let's take a quick look at the snapshot. Summer full of volatility. It seems like it's came to a crescendo in August. Delta's rampaging. This outbreak is effectively reassuring investors that perhaps the central banks won't take cheap money punch bowl away immediately. That's a good point. The US dollar that you touched on there, mate, looks like it's storming higher. The announcement at Jackson Hole, well, kind of whatever. We're waiting for a bit more information later this month. What do you think is really going to happen there, and what signals do you think we'll see? Will we see a rush to dial back into the asset purchases? What's your view, Pete?
Well, it's so difficult, Will, due to the COVID storyline, and that really creates the angst for any central banker. They must be pulling their hair out if they've got any left. So do they wait for a couple more months? And I think that's going to be pretty much the agenda. I'm not looking for any surprises. I don't think anyone's game enough yet, even with full employment and inflation. And how do you tackle inflation? Traditionally, you tackle it by raising rates, but there comes an issue that could greatly impact the fragility of the workforce. So no central banks are going to move early, possibly later in the year. And as you mentioned, the punch bowl, and that's the punch bowl as far as the cheap money punch bowl, I think it'll stay on the table a little bit longer.
All right. So the true hero here, let's have a talk about it. Is the British pound going to continue to make a run on its comeback?
It's had a nice move to the upside. It's really been quite strong. It's got further to run, of course. I think, I'm not suggesting it's going to hit those 141, 142 levels, but I think it's got a little bit more horsepower there. And all the currencies have been absolutely dynamic over the last 2 to 3 weeks. Have a look what's happened to the Aussie dollar. We're knocking on 75's door. It was only a couple of weeks ago, we're knocking on 70's door. And we were knocking on 80's door, but we were knocking on 80's door together in February. Since then, you've gone 80, nearly to 70 and back to 75. That's a 15-cent move, which is that's just enormous.
Significant. And gold, crazy ride for gold. We had a mini flash crash. It had a pretty wild ride, bounced back. And look, I guess it's closing virtually unchanged. So, what's happening there? Is it simply a capitalization on the dollar's turnaround?
Yeah, very much so. And also remembering that's those big washouts when you can see them move and what they can do within a matter of hours. It's not unusual. Watch your screens. That was demonstrated, I think, 3 Mondays ago, when all of a sudden we woke up and boom, it just got spanked down $60-80 and then pulled back to 1680, 1690, and then it's gone. I think we're at about 1825, 1830 this morning.
Well, there's a quick snapshot of some of the signals that have been driving the moves that we've seen on the screens already. But look, let's take a quick look at the currency performance. This is a 2-week chart on screen. Pretty self-explained. You've got the New Zealand dollar at the top, flowing right down to the bottom area of the screen, which is the dollar index. Pete, the New Zealand dollar, 3.8%.
Absolutely, Will. Big move. That's just enormous over a 2-week period. That is where traders look for those short-term opportunities. You're looking at your 4-hour charts. We've spoken on that, off screen together, Will, many times. A 4-hour chart, looking what a 4-day chart is. You're looking at your technical indicators, seeing what's happening as far as fundamental analysis, what a central bank's saying. We were all anticipating that the new Kiwis were going to actually jack rates up, and that didn't happen a couple of weeks ago. So I can imagine if that was possibly a little bit of, that has already been baked into the Kiwi, but let's just wait and see. I think there's even more upside yet.
Pete, hot labour market in Canada looking like they're coming back to full employment.
Even you get a job over there, Will.
Hey, I might need a job over there, mate. Look, we're going into winter. There's probably some skiing to do. Maybe I can pour some beers, mate, up on one of the slopes.
I think so. Pouring a beer, maybe doing haircuts. I've got to commend you. You're looking very young this morning. You've had a haircut. Did you do that
high
yourself?
Speed, low drag, and as they say in our some of our friends in the sailing community say, well, once you're ahead, mate, you just got to get ahead and keep extending.
Well, that's what they used to say about Usain.
That's exactly what they say about Usain. Too much power in those legs. V-shaped recovery here, Pete.
Very strong, Will, as you can see, huge. And this is going to be an impact as far as we march towards that. Canada really is ahead of Australia in the sense of a full employment scenario. So it's going to be, I think, that war for talent over the next 6 to 12 months in Australia, certainly, and Kiwi and many of those mature economies, because you're not getting foreign workers to your shore, Will. And this is a great impact that people are having to say, well, look, it's a war for talent. I need that job done. I need those skill bases, and how much am I prepared to pay for it? And that comes, it's very much a dilemma on every.
We're very much seeing in our
side.
own business, Pete. The opportunity out there is significant, but tell you what, it's a tough market. Mate, on screen now, let's talk oil. We spoke oil late last week. Oil's a really interesting story. It continues to drive the many conversations. Life without oil, I'm not sure people can actually imagine what it would be.
Yeah, it'd be very tough, very, very tough. And as you can see there, really big, monstrous moves from where it capitulated down to that 61.77. And that's only a matter of 2 weeks ago. And then boom, and marching on 70's door. So it's had those big moves. Again, you can see those moving averages. You can see those different timeline horizons as far as, I think there's a 20-day, a 40-day, and a 200-day. I need new glasses, Will.
Oh, you do, mate, but you probably can't. You probably find there's a few products that are derivatives of oil in those glasses you're wearing, Pete.
Will, you're very unkind this morning. I thought you were one of my friends, but unfortunately, the truth is being told.
Oh, look, mate, look, you can only do what you can only do. Now, listen, if we take a look at the gold chart, we spoke gold earlier. We've seen the rise, the fall, the dip, the big dip, and now the comeback to close reasonably steady.
On that, do you think it's got the capacity when you're looking at that? Are we going to see a mirror image back to that 1918 handle, or right to that's in the middle of the screen, or over to the left there at 1959? You're still a long way off that, Will, at 1830, 1825. There's plenty of upside. People think, oh, gold's fully priced. When you're seeing that, there's nearly to the point of another $140 there. Yeah,
there could well be, mate. When you look at those trading bands, that you actually could find that there is some good upside. But the question becomes, what market signals do traders need to see in order to actually achieve that outcome?
I think they've got to keep on looking at the US dollar, look at the fragility as far as, well, inflation's normally traditionally a driver of gold price. The second part, of course, is fragility of that US dollar, geopolitics. We saw Afghanistan and what other surprises come across our bow in September and October and November leading up to Christmas. And the overall, do we see any structural weakness across it? That Michigan sentiment index really does concern me, and we really pulled that apart last week. You can't take your eye off that chart.
13% down, Michigan sentiment index, and it concerns you. Why, Pete?
Concerns me for two things. First off is that it's over a 40-year or 43-year window. That's 516 months. 6 of them, so it's 1%, were this is where it fell into that bucket. So if you're looking at statistics of 1% of the worst case scenario, that shows the fragility. And I think it's something that I think any economist and any trader has to be mindful of as the storyline that could catapult gold higher.
There's the signal, there's the trade. And ladies and gentlemen, that's Peter McGuire this week on xm.com's Around the Markets program. Pete, thanks for the insight. Thanks for the conversation. We'll see you next week.
All the best, Will. Take care, and all the best to our traders.